Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, August 28, 2026. Effective tax rates under the current system and the FAIRtax. Now, effective tax rate under the income payroll tax system is simply the percentage of your total income that you pay in federal taxes. Now, since the FAIRtax taxes spending and not income, the effective tax rate under the FAIRtax is the amount of FAIRtax you pay out of your own pocket, expressed as a percentage of your total spending. Now, in both cases, your effective tax rate is significantly lower than the rate that's attached to your tax bracket or to the 23% FAIRtax rate applied to each individual taxable purchase. Here's how you calculate your effective tax rate under the current income payroll tax system. Start with your gross income, subtract your standard deduction. Use the 2026 marginal brackets, which start at 10% up to a maximum of 37%, to get the income tax before other credits and deductions. Then you subtract non-refundable credits, most notably the $2,200 per child tax credit, to get the actual tax owed. But then you've got to add in the employee side payroll tax, which is 7.65% of total wages. That applies only to earned income, not to Social Security benefits or retirement withdrawals. And then you divide the total tax paid by your gross income to arrive at your effective tax rate. Here's how it works under the FAIRtax. Now, there's no income tax, no payroll tax, so a $70,000 paycheck arrives intact. Now, the FAIRtax 23% rate is tax inclusive, the way the current income tax calculates its rates, so the tax is shown as a share of the total and not added on top. So, $70,000 of spending contains $16,100 of embedded FAIRtax. Every household receives a monthly prebate tailored to your household size, and that's set at 23% of the federal poverty guideline for that household size. So your net FAIRtax paid is the gross tax minus the prebate. Then you divide your net tax by your total spending and get your effective tax rate. Here are a couple examples. Let's look at a working couple with two children ages 8 and 10. Under the current system, assume a gross income of $70,000. Subtract the standard deduction from that, the standard deduction $32,200, and you have a taxable income of $37,800. The tax before credits on that amount in the 10 to 12% bracket is $4,040. Then you subtract the child tax credits, $2,200 per child, or $4,400 total, and you arrive at a federal income tax owed figure of 0. However, you still have to add that 7.65% payroll tax, which comes out to $5,355. So this family's total federal tax is the $5,355 they pay in payroll taxes, so that's an effective tax rate of 7.65%. The child tax credit fully offsets this family's income tax, so their entire current system burden is the 7.65% payroll tax withheld from their paycheck. Now, under the FAIRtax, there is no federal withholding, so this family brings home the full $70,000. Now, assuming they spend it all on new retail goods and services, their effective tax rate under the FAIRtax comes out to be 12.16% after the prebate. Now, that's higher than under today's system because the credits that erase the income tax liability have no FAIRtax equivalent for a family of this size. Now, it should be noted that this example uses only the workers' half of the payroll tax. Most economists believe that workers also bear the employer's matching 7.65% through lower wages, so this will put the current system payroll tax rate closer to 15.3%. And this is just a reminder that the correct effective tax rate often depends on assumptions as much as arithmetic. Now let's look at what this couple does under the FAIRtax. The take-home pay, assuming it's all spent on new retail goods and services, is $70,000. $16,100 of that is FAIRtax. This family receives a prebate, according to the 2026 poverty guidelines, of $7,590. So of the $16,100 fair tax they pay at the cash register, $8,510 comes out of their own pocket. So you divide that $8,510 by the total spending $70,000, and you get an effective tax rate of 12.16%. Now, it must be noted the above calculation is a worst-case scenario. Very few families spend 100% of their income on new goods and services. Most will save some. Many will purchase used goods, which are not subject to the fair tax. So if this family buys a previously owned home, their $15,000 annual payments are not subject to the fair tax. If they purchase used cars, their $10,000 annual car payment also not subject to the fair tax. So if $25,000 of their spending is on used goods, there's a new calculation here. You've still got the $70,000 take-home pay, but you spend $25,000 of that on non-taxable purchases, leaving a taxable amount of $45,000. Within that amount, $12,650 is fair tax. The prebate is the same, $7,590, leaving a net fair tax paid of $5,060. Now, express that $5,060 as a percentage of their $70,000 total spending, and you get an effective tax rate of 7.23%. In conclusion, upon hearing the fair tax rate is 23%, many people instinctively jump to the mistaken conclusion that the fair tax is going to make their lives 23% more expensive. Unless you're spending multiplied millions of dollars every year, your effective fair tax rate is going to be much lower. Now, as you can see in the above examples, the fair tax is assessed on the purchase of new goods and services. If a family elects to purchase used goods, those are not taxed, and that's how the second illustration showed the effective tax rate under the fair tax to be less than under the present income payroll tax system. Alternatively, if the family elects to purchase only new goods, then their effective tax rate is going to be higher. The key word here is elects. Unlike the income payroll tax system, the fair tax lets people control their effective tax rate with their spending decisions. Now, people are upset with our present income payroll tax system because it benefits only a small percentage of the population, the very wealthy and the members of Congress who fund their reelection campaigns by selling favorable tax treatment to the highest bidder. For the rest of us, the tax system's an expensive, intrusive, incomprehensible mess that none of us fully understands. The fair tax is the answer. The fair tax, H.R. 25, is more than just a proposal for a retail sales tax. It's a fundamental restructuring of the federal fiscal structure. Unlike other excise taxes, which are normally applied to specific products and in different percentage amounts, the fair tax applies a 23% inclusive rate to all new retail products and services. The fair tax is a national retail sales tax on new retail goods and retail services. It provides a family credit so that all purchases up to the poverty level are not taxed. There's no withholding from your paycheck, and you never have to file a tax return again telling the government how much you earned and how much you spent. Also, you'll never ever be harassed by the IRS again because the fair tax abolishes the IRS. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and returns freedom to the American people. It's imperative, though, that we don't replace the current income tax and the IRS with an alternative system that can still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax and the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting. And don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempts to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well, so no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent effort from all of us. We need your financial assistance and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Please email us at info@fairtax.org and we'll give you some options on how you can best help us. At a minimum, please call your congressional representatives and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution? Pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system and the IRS along with it? Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to FAIRtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.